Hello, and welcome to Global ChartWatch, the channel where we break down charts, decode indicators, and guide you, step by step, towards smarter trading decisions. Whether you're just starting your journey in forex or crypto, or you're already deep into candlestick patterns and technical setups, this place is for you. On this channel, we don't just teach theory, we walk you through real examples, with real chart analysis, and most importantly, with context. Today's video is especially important because we'll be diving into one of the most useful and often overlooked tools, the box strategy. A simple concept, but incredibly powerful if you know how to use it properly. So, let's begin. Let's break it down from the beginning. The box strategy is a method used to identify key market zones, specifically where price is likely to react, reverse, or break out. It starts with one simple step. Right pointing finger emoji, draw a box around the previous day's high and the previous day's low. That's it. We call these two levels the upper zone and the lower zone. And they are not just random lines. These areas are loaded with psychological weight. Because that's where traders made the biggest decisions yesterday. That's where buyers fought sellers. And that's where institutional orders are often stacked. Now here's the key. Push pin emoji, the top of the box, usually represents the zone of sellers. This is where price often meets resistance. Push pin emoji, the bottom of the box, represents the zone of buyers. A place where price tends to bounce or reverse upward. These zones act like magnets. At the market open, price will often move quickly, trying to test one of those boundaries first. And that's exactly what makes this strategy work. It's not about predicting, it's about preparing. You're setting a framework for a price to reveal its intentions. In the next chapters, we'll break down how to enter when the box is tested, what kind of candles to look for, and how to avoid common traps that most traders fall into. But first, let's take a closer look at the structure of the box and the psychology behind every zone. Are you ready? Let's move into the next section. Now that we understand what the box strategy is, it's time to explore how the box actually works. Let's take a closer look at the structure of the box and what each zone really represents. Think of the box like a battlefield. At the top of the box, we find the strongest sellers. This is where many institutional traders set their short positions. It's also where a lot of retail traders place their stop losses when they're trying to go long. That's why this level often acts as resistance. When price reaches the top of the box, it often struggles to push higher. Sellers begin to step in, and price may reverse or consolidate. So remember this. Round push pin emoji, the top of the box equals sell zone. Round push pin emoji, the bottom of the box equals buy zone. Let's go to the bottom. Here, we find the strongest buyers. This is the area where institutions look to enter long positions. It's also where retail traders place short stop losses. Just like the top, this zone is packed with liquidity. And that's why it's often protected. When price touches the bottom of the box, you'll often see it bounce up. Now, what about the middle of the box? This is where many new traders get trapped. In the middle, there's no clear edge. No confirmation. No direction. Just noise. Especially in the first 15 to 20 minutes after the market opens. It's usually a zone of volatility, whipsaws, and choppiness. That's why we avoid taking trades in the middle. Wait until price reaches the top or bottom. Then look for confirmation. Because that's where the big players show up. Let's review. White check mark emoji, top of the box, look for short setups. White check mark emoji, bottom of the box, look for long setups. No entry sign emoji, middle of the box, avoid trading there, especially early in the session. In the next section, we'll dive deeper into the psychology of breakouts, and what actually happens when price challenges the edges of the box. Let's continue. Now let's talk about something critical. Something that separates reactive trading from smart trading. Let's talk about breakouts. When price approaches the edge of the box, either the top or the bottom, something important is about to happen. Most new traders get excited. They see the market moving with momentum. They think, this is the breakout. I'm getting in. But here's the truth. Not every breakout is real. And understanding the psychology behind breakouts can help you avoid fake moves and enter only when the odds are in your favor. Let's start with the top of the box. When price moves toward the upper boundary, it's entering an area filled with sellers. Why? Because that's where institutions are often waiting. It's also where retail traders, who went short earlier, have their stop losses sitting. So what happens? Price pushes up, hits those stops, and gives the appearance of a bullish breakout. But then, sellers slam the market back down. This is what we call a false breakout, a liquidity grab. It's designed to trap retail buyers and let smart money sell into the strength. Think of it like this. Price isn't just going up because of buyers. It's going up to fill sell orders waiting above. Once those are filled, the move reverses. That's why buying at the top of the box, without confirmation, is a dangerous mistake. Reversed red triangle emoji. Now let's look at the bottom of the box. The same logic applies, but in reverse. As price drops toward the lower boundary, we enter the zone of buyers. Big traders, banks, funds, institutions, they often set their long entries down here. But again, the market knows where retail traders place their short entries and where they hide their stop losses. So price dips below the box, triggering those stops, and then snaps back up. This fake breakdown is often followed by a sharp reversal. You'll see a strong wick, a powerful candle up. And that's where smart traders go long. We don't want to sell at the bottom, we want to wait, see the rejection, and go long with confirmation. So how do we know if it's a real breakout or a trap? That's the million-dollar question. Here are some tips. White check mark emoji. Look for a strong closing candle outside the box, not just a wick. White check mark emoji. Wait for volume to confirm the move. White check mark emoji. Watch for retests. Breakouts often pull back to the edge before continuing. White check mark emoji. Add tools like RSI, EMA, or candlestick confirmation. Also ask yourself, is the move happening during a high volume session? Is this level being tested for the first time today, or is it the third time? The more touches a zone has, the weaker it becomes. Remember, markets don't move in straight lines. They move in waves, traps, and psychological games. Your job is not to predict every breakout, but to understand the story. Example from your chart. Now let's take a look at one of the key moments from your video. Around the 20-minute mark, we see price pushing through the upper boundary of the box. It looks strong, multiple green candles, momentum is rising. But wait. Let's observe the next candle. It closes back inside the box. That's a fake breakout. Instead of chasing the green candle, a smart trader waits, sees that rejection, and possibly goes short. Back toward the bottom of the box. Later in the chart, we see price hit the bottom boundary. A long lower wick forms, RSI is low. Momentum shifts. That's a long setup, with confirmation. These are the trades we want. Let's summarize. Small orange diamond emoji. At the top of the box, don't buy. Look for signs of rejection, wicks, red candles, volume exhaustion. It's a sell zone. Small orange diamond emoji. At the bottom of the box, don't short. Look for bounce signals, bullish engulfing, long lower wicks. It's a buy zone. Small orange diamond emoji. In the middle, stay out. Let the market show you where the battle is happening. Mastering box psychology is about patience, discipline, and learning to wait for the market to speak first. In the next chapter, we'll go over the entry rules, step by step, and show you how to combine candles, indicators, and box zones for high probability setups. Let's continue. We've talked about the box. We've talked about its psychology. Now let's talk about how to actually trade it. Because once price reaches the edge of the box, you need a clear and simple plan. Let's go step by step. White check mark emoji. Step 1. Let price come to you. Never chase price. We don't trade in the middle of the box. That zone is full of confusion, noise, and no clear direction. Wait for price to touch the top or the bottom of the box. That's where decisions are made. White check mark emoji. Step 2. Watch the candles, carefully. Once price reaches the edge, we slow down. We watch the candles, one by one. Ask yourself, is price rejected from the zone? Are there long wicks showing hesitation? Did a bullish candle appear at the bottom? Did a bearish candle form at the top? These are signs of a potential reversal. Let's break that down. Green square emoji, at the bottom of the box, we want to see a candle that closes above the open, a bullish signal. Even better if the body is large and confident. Red square emoji, at the top of the box, a bearish candle, with a strong close, gives us the go-ahead to look for shorts. The stronger the candle, the more confidence we have. White check mark emoji, step 3, rejection wicks. Now pay close attention to the wicks. Wicks tell the real story. Let's say price dips below the box, but then the candle closes back inside with a long lower wick. That means buyers stepped in hard. Same at the top, a candle pokes above the box, but closes with a wick on top. That's a rejection by sellers. These are some of the most powerful signals in the box strategy. And they're right there on your chart. No indicators needed. White check mark emoji, step 4, enter with a plan. Now that we see confirmation, we don't just click randomly. We enter with a plan. Here's how. Push pin emoji, wait for the candle to close. Push pin emoji, place the entry slightly above, for longs, or below, for shorts. Push pin emoji, stop loss? Just below the wick, for longs, or above it, for shorts. Push pin emoji, target? Could be the midpoint of the box. Or the opposite side of the box. Your target depends on the size of the box, the strength of the move, the behavior of price as it progresses. Always ask, where is price going? And where could it react again? Brain emoji, recap. Here's what makes a strong box trade. White check mark emoji, price touches the edge, not the middle. White check mark emoji, you see a clear rejection. White check mark emoji, a strong candle closes with conviction. White check mark emoji, you enter with a well-placed stop and target. White check mark emoji, and you stay calm, even if the price hesitates. Trading the box is about waiting, not forcing. Let the setup come to you. Let the candle speak. And when they do, listen carefully. In the next chapter, we'll walk through real examples from your screenshots, and break them down step by step. Now it's time to bring everything together. Let's look at what's actually happening on your chart. This is where theory meets reality. Around the 20-minute mark of your video, we see a major moment. Price approaches the upper edge of the box. It's been consolidating, building tension. And now, we're seeing movement. Left magnifying glass emoji, moment 1, box breakout attempt, upper side price moves up. One strong green candle forms. Then another. It looks like a breakout, doesn't it? It feels like the market wants to go higher. But here's where smart traders pause. We don't jump in yet. We ask, is this move real? Or is it a trap? Let's look closely. On the third candle, we start to see hesitation. The body is smaller. There's a small wick on top. Volume seems to fade, momentum slows. Then it happens. The next candle closes back inside the box. That's our signal. A classic false breakout. Sellers step in. The market pulls back. And those who chase the breakout are now stuck, or already stopped out. Brain emoji, what does it mean? This is where box logic becomes powerful. Remember what we learned earlier. The top of the box holds stop losses. It's where sellers wait. A wick and rejection candle at this level often means reversal. You didn't need any indicators to see this. Just clean candlestick behavior. You didn't need a fancy signal. Just patience. Left magnifying glass emoji, moment 2, retest and pullback. After the false breakout, price drops back into the box. It doesn't fall apart right away. It moves sideways for a bit. Then, slowly, a bearish candle takes over. The bodies start to shift red. No new highs. Just lower closes. Eventually, we see price head toward the middle of the box. At this point, we wait. Because remember, we never trade in the middle. Left magnifying glass emoji, moment 3, the move toward the bottom. Now price continues to drop. It approaches the lower boundary. Here, we slow down again. We want to see if buyers are ready to react. We look for long lower wicks, bullish engulfing candles, a strong push upward. But, in this moment, there's no strong confirmation yet. No rejection wick. No candle body flip. Just soft movement. So what do? We wait. No confirmation equals no trade. That's the discipline. Push pin emoji, summary of this example. Let's go over what we saw. White check mark emoji, Price moved toward the top of the box white checkmark emoji, we saw a small breakout, but no strength white checkmark emoji, a rejection wick formed, price dropped back white checkmark emoji, then a pullback toward the bottom of the box white checkmark emoji, but no clear buy signal appeared, so we stayed out. That's what real price action trading looks like. It's not about predicting every move. It's about reacting with logic, only when the market gives you permission. When in doubt, wait. Let the chart prove itself. In the next chapter, we'll go even deeper. Looking at another chart example, this time focusing on a successful box rejection with strong candlestick confirmation. Let's keep going. Now let's look at a different scenario. This time, not a trap, but a high probability reversal. The kind of setup that smart traders wait for. The kind that rewards discipline. 3 o'clock emoji, a few minutes later. We're watching price slowly approach the lower part of the box. It's not rushing. It's not crashing. It's drifting. Then suddenly, a strong red candle appears. It pushes through the bottom edge of the box. But, we don't panic. We stay calm. And we watch closely. Round push pin emoji, what happens next? The very next candle tells us everything. It opens just below the box, but closes back inside. And more importantly, it leaves behind a long wick at the bottom. A rejection. Buyers stepped in, hard. They didn't just push price back inside the box. They defended that level. That's our clue. That's the market telling us. Someone is buying here, and they're serious. White check mark emoji, the candle confirmation. The next few candles give us more evidence. We see a green candle, a real one, with a solid body, closing above the previous high. It's not weak. It's not indecisive. It shows intention. At this point, we connect. Let's break it down. Push pin emoji, entry, just above the bullish candle's high push pin emoji, stop loss, below the lowest wick push pin emoji, target, mid box, or upper boundary. You don't need to overthink it. You already saw the trap earlier. Now, this is structure. This is how a clean reversal looks. Brain emoji, why this works. Let's take a step back. Why was this setup so strong? Here's why. White check mark emoji, it happened at a key level, the bottom of the box white check mark emoji, it had a rejection wick, showing buyer interest white check mark emoji, it was followed by a bullish engulfing candle white check mark emoji, the market respected the box boundaries white check mark emoji, and there was no rush, just clear confirmation. This is where traders win. Not by guessing, but by letting the market speak first. And answering second. Bullseye emoji, what to avoid. Now remember. Many traders would have sold the red candle that broke below the box. They would have seen it as a breakout. But it wasn't. It was a trap. And now they're caught short, as price reverses hard. You're not that trader. You waited. You watched. You acted with clarity. That's the difference. Push pin emoji, recap, perfect box reversal setup. Let's review. Small blue diamond emoji, price moved to the bottom of the box small blue diamond emoji, one candle broke through, then reversed back in small blue diamond emoji, rejection wick formed small blue diamond emoji, bullish candle followed small blue diamond emoji, you entered on confirmation small blue diamond emoji, you placed a smart stop small blue diamond emoji, you managed the trade with logic. That's not just a good trade. That's a lesson in patience. And that's what we practice here. On Global ChartWatch. In the next chapter, we'll look at common mistakes traders make when using the box strategy. And how to avoid falling into those traps. Even a solid strategy can fall apart if you use it the wrong way. So in this chapter, we'll focus on the mistakes. The things that hurt traders the most when using the box method. Let's break them down one by one. Cross mark emoji, mistake number 1, trading in the middle of the box. We've said it before, but it needs repeating. Do not trade in the middle of the box. That area is full of noise. There's no clear direction. No structure. No edge. Price bounces back and forth with no commitment. This is where new traders lose the most money. They jump in too early. They get faked out. They overtrade. The real decisions happen at the edges. Not in the middle. Cross mark emoji, mistake number 2, buying at the top of the box. It looks strong. A few green candles form. Momentum builds. You feel the breakout is coming. But then, price flips. Wick appears. And boom, it falls. You just bought into a trap. The top of the box is often where sellers wait. This is where stop losses are triggered. And where big players take profits or open shorts. Never buy blindly at the top of the box. Wait for confirmation. Or better, wait for the breakout to hold before entering. Cross mark emoji, mistake number 3, selling at the bottom of the box. Now flip that mistake. You see a few red candles. Market looks weak. You feel it's about to collapse. You sell. And then price reverses. It was a trap. Again. The bottom of the box is where buyers defend. It's where liquidity lives. Where false breakdowns often happen. Don't sell weakness into the floor. Wait for the breakdown to stick. Or look for buy setups if you see rejection candles. Cross mark emoji, mistake number 4, no candle confirmation. This one is subtle. But deadly. You see price reach the box edge. And you jump in. But there's no confirmation. No wick. No shift. No strong candle close. Just hope. Hope is not a strategy. Always wait for white check mark emoji, rejection wicks white check mark emoji, engulfing candles white check mark emoji, strong directional closes. No candle? No trade. Simple. Cross mark emoji, mistake number 5, trading without a plan. This is the most common one. You enter a trade. But you don't know why. You don't have a clear stop. You don't have a target. You're not sure what you're risking. You're just reacting. That's not trading. That's guessing. Every trade needs a plan. Push pin emoji, where do you enter? Push pin emoji, where do you exit, if it works? Push pin emoji, where do you exit, if you're wrong? Push pin emoji, how much are you risking? If you can't answer those, don't take the trade. Bullseye emoji, recap, top 5 box trading mistakes. Let's summarize. Reversed red triangle emoji, trading inside the box reversed red triangle emoji, buying at the top reversed red triangle emoji, selling at the bottom reversed red triangle emoji, ignoring candle confirmation reversed red triangle emoji, no trade plan. Avoid these. And you're already way ahead of most traders. In the next chapter, we'll show how to take all of this knowledge and turn it into a complete system you can use every day. Now that you know how the box works, how to draw it, how to read it, and how to avoid mistakes, it's time to take it to the next level. Let's talk about turning this strategy into your own system. A system that fits your style, your routine, and your level of experience. Jigsaw emoji, step 1, define your time frame. Your strategy starts with your time frame. Are you day trading? Then you might draw the box using the previous day's high and low on a 5-minute chart. Are you swing trading? You could draw the box using weekly levels on the 1-hour or 4-hour chart. The logic stays the same, but the context changes. Choose a time frame that fits your lifestyle. Jigsaw emoji, step 2, draw the box, same every time. This part is simple. And it needs to stay consistent. Before every session, draw your box. Push pin emoji, the high of the previous day. Push pin emoji, the low of the previous day. That's your battlefield. Those levels are not just lines. They are zones of interest, where liquidity, psychology, and real decisions happen. No guesswork. No indicators. Just clean structure. Jigsaw emoji, step 3, wait for price to reach the edges. Now comes the hardest part. Waiting. You don't trade the middle. You don't chase. You wait until price comes to the edges of the box. That's where you focus. That's where trades begin. Think of it like this. Push pin emoji, top of box equals sell opportunity. Push pin emoji, bottom of box equals buy opportunity. Push pin emoji, middle equals no trade zone. Stay out of the chop. Trade where the story unfolds. Jigsaw emoji, step 4, look for price action confirmation. Before you enter, you need proof. Don't just react to price touching the zone. Wait for the story to unfold. Here's what to look for. White check mark emoji, rejection wick, shows price was pushed back. White check mark emoji, bullish or bearish engulfing candle, shows strength. White check mark emoji, momentum shift, green to red, or red to green. If none of that shows up, don't enter. The market didn't invite you in yet. Jigsaw emoji, step 5, plan the trade, entry, stop, and target. Now that you've seen confirmation, it's time to act, with a plan. Ask yourself. Push pin emoji, where will I enter? Usually, Just above or below the signal candle, push pin emoji, where is my stop? Under the wick, or just outside the box zone, push pin emoji, what is my target? The other side of the box? A fixed reward ratio? Never trade without these answers. Discipline is what separates a trader from a gambler. Jigsaw emoji, step 6, journal everything. This is where growth begins. After every trade, write down what happened. White check mark emoji, where was your box? White check mark emoji, did price respect it? White check mark emoji, what candle gave confirmation? White check mark emoji, did you follow your rules? White check mark emoji, what would you do differently next time? Your journal is your best mentor. Use it. Brain emoji, final thoughts, it's not about being right. Trading isn't about predicting the future. It's about reacting to what is. With logic, with structure, and with consistency. The box strategy gives you that structure. But you have to build a system around it. White check mark emoji, be patient. White check mark emoji, be selective. White check mark emoji, be disciplined. White check mark emoji, let the market come to you. Now let's return. The moment the market broke through the box. Let's slow it down. And observe what's really happening. We see a large green candle, strong body. No hesitation. Closing above the box. That's momentum. That's conviction. And most importantly, that's a decision made by the market. This wasn't a random spike. It was the result of buildup. Of pressure. Of accumulation. Price stayed inside the box for a long time. Buyers and sellers testing each other. Until one side won. And in this case, the buyers broke through. Now let's look at what came next. Notice the next candle? It didn't fall back. It didn't reject. Instead, price stayed outside the box. It respected the breakout. That's your confirmation. That's your edge. This is the kind of moment you wait for. A clean, controlled breakout with follow-through. So what do we take from this? Simple. White check mark emoji, you drew the box. White check mark emoji, you waited for the edge. White check mark emoji, you saw the breakout. White check mark emoji, you waited for confirmation. White check mark emoji, you acted with logic, not emotion. That's trading. That's what this channel is about. On Global ChartWatch, we believe in showing the how and why behind every move. We don't chase price. We study it. We learn from it. And we use it. Every candle. Every box. Every decision is part of the bigger story. Thank you for watching. If this video helped you understand the box breakout setup, hit that like button, subscribe to the channel, and let us know in the comments. Push pin emoji, what would you have done at this breakout point? Push pin emoji, would you enter? Push pin emoji, would you wait? Push pin emoji, or would you look for a retest? Let's learn, together.